half of 2021 was characterized by further growth normalization as fiscal stimulus and low base effect faded away. Growth pace in the near term could be derailed by the Delta variant, but we view that the uptrend in growth should be maintained in 2022 on higher vaccination rates. Global inflation remains to be the dominating theme in the coming quarters, driven by ongoing supply chain constraints and high energy price. Markets right now priced in 2 to 3 hikes in 2022. Despite tighter financial conditions in the US, ample liquidity and sizable negative yielding bonds globally would continue to chase yield like Asian and China high-yield bonds. In China, policy drove much of the volatility in 2021. We think 2022 will not be different. With the government's priority on curbing financial risk and leverage, credit growth should remain in tight control. However, we expect that credit contraction is bottoming and some marginal rebound should occur in the coming quarters. For the property sector, the tighter policy on developers' financing under the 3 red lines and high land price from concentrated land sales resulted in more failed land auctions. Weaker property sales may persist. All this may prompt some marginal easing given the contribution of the sector to China's GDP. As policy and event risks are likely to stay on the horizon, we remain focused on credit quality for the rest of 2022. Asia's economic recovery should remain intact. We, however, see less upside for Asia investment-grade bonds, given the rising US rates and tight credit spreads. We prefer Asia and China high-yield bonds, given attractive valuation and shorter duration. In particular, credit spreads for China high-yield bonds stood at 4 standard deviation cheap over the last 5 years, indicating that a lot of the policy risk and sector consolidation have been priced in. Through our active management and bottom-up approach, we focused on searching for candidates that are long-term survivors. As the Chinese property sector is undergoing consolidation with leverage control, this should anchor their credit profiles in the longer run.